Now imagine you bought a condo in Ottawa a couple of years ago. Maybe it was pre-construction, maybe it was resale, but either way, the plan made perfect sense at the time. You're going to build some equity in this place for a few years, maybe rent it out if you need to. Worst case, you'll sell it in a few years and at least break even with the equity you've been able to build. Fast forward to today and your condo is worth less than you paid for it. You can't sell without writing a check at closing for the privilege of getting out of this place. You try to rent it out and the numbers just don't cover the mortgage, and you're stuck making payments every month on a place that is moving in the wrong direction. This is happening right now in Ottawa, not just in Toronto, not just in Vancouver, here. And today I want to talk about who's getting hurt by this, why it's happening, and what you should do if you're thinking about buying a condo right now. So let's start with what's actually going on, because the headlines tend to focus on the bigger markets and kind of skip over Ottawa like we're immune to this trend, and we're not. Condo inventory in Ottawa has been steadily building. There are significantly more units sitting on the market right now than there were even 6 months ago. Prices have been trending down, not a dramatic crash, but a slow bleed where every month the numbers are a little bit softer than the month before. And that part really matters. The units that are sitting aren't just sitting for a couple of weeks. They're sitting for a month, 2 months, sometimes even longer than that before they either sell or come off the market. When you've got that much inventory and listings are going stale, sellers start to lose their leverage very fast. Now, if you've been watching what's happening in bigger markets like Toronto and Vancouver with the condos, Ottawa is not in that same territory. We didn't have the same sales volume of those tiny 500 square foot investor grade condos built here. But we're following the same pattern, just on a smaller scale and with a bit of a delay. So who's actually in trouble right now? There are three main groups. The first is investors who bought near the peak, 2021 or early 2022, expecting that they'd be able to rent the place out or have a tenant cover the mortgage. When they bought, interest rates were super low, and on paper, the math worked out perfectly. Then, as we know, the rates went up, the mortgage payments went up, maybe the condo fees went up too, and suddenly they're $100 a month in the hole with negative cash flow. And every single month they hold on to this property, they're losing more money. And here's the part that makes it a really nasty trap. You can't really sell either because prices have come down as payments have went up. So if they try to sell today, they're not getting back what they paid. And after you factor in realtor fees, land transfer tax, legal expenses, they'd have to bring money to the closing table just to get out of this place. So these investors are genuinely stuck. They can hold and keep losing money every month, or they can cut their losses, sell, and take the big loss on the chin. The second group is a little bit more sympathetic. I know many people don't feel super sorry for investors. It's pre-construction buyers who committed at peak pricing and are now watching their units approach completion or are taking possession, knowing that the place is going to be worth less on closing day than what they agreed to pay. Some of these people are going to close and take the hit. Some of them are going to try to assign the contract to somebody else, usually at a loss. And some of them are going to seriously consider just walking away from their deposits. That's a gut-wrenching decision, but for some people, that's actually the least bad option that makes the most sense. Now, the third group that I think is the most sympathetic, and these conversations are always pretty heartbreaking, is the condo owner who bought this place with the intention to live there for the long term, not as an investment, but something in their life changed. They got a job offer somewhere else, they had a kid and need more space, or their relationship ended unexpectedly and now they need to sell. These people weren't speculating, they just bought a home that made sense at the time, but now they're stuck in the same trap as those investors because the market moved against them and their timeline put them in a rough spot. So how did we get here? It's really a few things stacking on top of each other. The first one that we already talked about is interest rates. When rates were at the rock bottom, the monthly cost of carrying a condo was low enough that almost any unit could cash flow as a rental or at least break even if you brought enough of a down payment to the table. That made it feel like buying a condo was a no-brainer, and a lot of people bought on that assumption. When the rates went up, the math broke, and it's pretty much that simple in a lot of cases. The second factor is new supply. There are condo buildings in Ottawa that were started during the boom and either just completed or are completing now, and all of these units hit the market around the same time. Some as resales from investors who don't want to close on the places, some as rentals competing with each other, driving rents down, and some as new inventory from the builders themselves. This wave of supply is landing into a market that just doesn't have demand to absorb it at its current prices. In fact, a lot of these buildings are ending up being converted to rental units because they just don't make sense to sell as condos anymore. Not enough people want them. And the third thing that's really causing this inventory to stick around is just seller psychology, and we see this in all sections of the market. A lot of these condo owners are still anchored to what their unit was worth a few years ago. Their agent tells them that the market has shifted and they should lower the number, and they just can't accept it. So they list too high, the listing sits, and eventually they either reduce their price or take it off the market. That slow adjustment process is part of why the inventory keeps building up. There's this lag between what sellers want and what buyers are willing to pay, and how long it takes the sellers to get down from those high price expectations to reality. Now, if you're watching this as a first-time buyer, you don't own a condo yet, and you're thinking about getting into this section of the market, this section's specifically for you. Because all this pain that current owners are going through is creating something of an opportunity. More inventory does mean more choice. Listings sitting for a longer period of time means more leverage for you. Motivated sellers, especially investors who need to get out, means you can negotiate in a way that wasn't possible a few years ago. But you need to make sure you have a risk tolerance for prices going down a little bit more, and you need to be smart about it. Because the same forces that trap those owners could trap you too if you buy the wrong unit at the wrong time. Here's what I'd say. First, don't buy a condo in Ottawa right now as a pure investment. Definitely not. If you're buying it to live in and you're planning to stay there for at least 5 years, that's a different calculation. But if you're buying it hoping to flip it or counting on rent to cover the mortgage from day one, that math just doesn't work anymore. Second, look at what you're actually buying. Good floor plans in a good location in a well-managed building with a healthy reserve fund are going to be good purchases. A 500 square foot box that's facing the brick wall of the next condo building is probably not the move right now, unless it's just an incredible price. And third is don't skip the due diligence because you feel like you're getting a deal. Read the status certificate or have a lawyer read it for you. Look at the reserve fund study, find out if there's a special assessment coming. A cheap condo with a $30,000 special assessment around the corner is not a good deal. It's just that same kind of trap. And fourth, don't let anybody rush you. This is not the multiple offer market for condos right now. If a listing has been sitting for 3 or 4 weeks, you're probably going to be the only one offering on it. Take your time, negotiate hard, stick to your guns, and make sure the terms work for you. If you ever have any questions, don't be shy to reach out. Thanks so much for taking the time to watch, and have a wonderful day.